Well, good day, traders. I trust you're all well. Things are looking pretty quiet in the market at the moment, which is not unusual. I mean, we've got news coming up, but I think it's probably a little bit too early for my experience. Should have seen a lot more drama by now. So these are the four markets that I'm looking at. As you can see, I mean, since the morning, this is Hang Seng. I mean, we just been in a trading range. You know, it is a trade and a bit of a bear acceleration at the open, and then nothing much. Well, I always say nothing much, but it's never nothing much, because if you are a scalper, you can trade, right? Gold just hanging above the low of yesterday. You know, we broke beneath the low of yesterday, so triggered a sale. Trading high time frame charts, but we are still just hanging around there. Then UK 100, you've been watching that since the open. Not many opportunities for us to jump in. S&P 500, usually big moves coming in as we get to the open of the US sessions, but you know, anything can happen during the day. So nothing much taking place there. Thought I'll just point that out just to, if you are waiting, I am waiting with you for things to happen. Something interesting took place yesterday, this particular day here. I mean, it really was loaded with everything that we kind of talk about in terms of price action trading. So I want to have a look at that for us and see if there is any lessons that we could have gleaned, you know, had you been in the market. Now, I'm just keeping a look at YouTube, just in case someone is asking a question there. Now, here is the day before, okay? And that's the day that eventually became an outside candle. So I was talking to, you know, there's a trader who was just catching up with me. I mean, as I trade, for guys subscribe to my show, WhatsApp coaching is active. So the guys are asking questions and just kind of, you know, getting insights as you go along. So I said there were four problems. I sent him this chart. I just took a quick screenshot. I said there were four problems for the bulls. We had this. This is what we had at that particular stage. So that's interesting to say, well, why would George be saying there are four problems for the bulls? Now I'll show you exactly where we were when the day was like this before it became an outside day. And the four problems that I pointed out was this high here means a 4-day bear breakout. So I said that was problem number one, top of the 4-day bear breakout, and that's what was being tested. So for me at that stage, I was thinking, hey, if the bulls are super strong, they have to be super strong to accelerate above that. So that's problem number one. Problem number two was the high of the first candle of the month. Okay, first candle of the month of March. Why was that a problem? Well, we had an inside candle. Well, first with a tail on top. You know, bulls were breaking out above a bear channel. If we're going to break out above the channel, we need to have strength. So that selling on day one was a problem. Then we had an inside candle, which presented the other problem, because now we had an inside candle for the bulls breakout mode, which would be fantastic. The bulls were strong. Inside candle completing the first candle, they should have just accelerated up, and they failed. So that was number three, failed breakout above the bull inside breakout mode. So now the bulls had a big problem. You know, good setup, failing to break out above it, and they're facing all of these this resistance by the bears. Then number four problem was a dodgy breakout pullback high one. So bull opportunity for the bulls to accelerate up, tried to break out and failed. Then we had a pullback. So that was the breakout, which failed, pullback, high one, which is another attempt for the bulls to accelerate up. The problem was that it was a bull doji. You know, the bulls needed a complete low test candle closing on above its high. So as we had that, I said, yeah, there's a problem here for the bulls. So expect that the bears will come and reassert themselves. And this is what took place as the day began to unfold. So into the day as it took place. Now, a lot of these things we've kind of spoken about when you pop in on Wednesdays at the market, or if you just go back and look at these live trading profits videos, you'll see me talk about these quite a bit, or if you sit through the courses. So gap down. Okay, so here we go. Market closed, gap down plus bear candle, first candle, bear doji candle. Whenever you see a bear doji candle at the open, you're just going to have to say, okay, let me wait and see, get some insight to understand what is taking place. Let's have a look at the next candle. Bear inside candle, second candle. If you combine candle 1 and 2, you just get another doji. Okay, so if you look at the sum of these two candles, you get another doji. If you can't quite see them, just flip to the 15-minute chart and you'll see as that chart is forming that we have a doji candle by the second candle at the level of support from the US session. So BTW, best to wait. Nothing to do with looking for reversals at the open that we can jump in and trade. Bull inside candle, third candle. Then we have a bull inside candle, third candle, bull doji, still third candle, but now we have a converging triangle. Whenever I see a converging triangle at the open, I'm like, yippee, something dramatic is about to happen. Let's just give it an opportunity to set up so that we can jump in. At this stage now, you gotta be super ready. Your risk should have been worked out. You've got your measured moves. First candle, we always do a measured move that. So 50% extension and the full measured move we have been down here. So if the bears had sold off, that's what you're going to look at. Bulls, there is a measured move of a bull breakout of the first candle. Convergent triangle, we have here a high low that's created from the US session. Then as the fourth candle is unfolding, ends up as a bull breakout, but before it becomes a bull breakout, what takes place with a failed breakout below the low of the convergent triangle. Now, whenever you see a convergent triangle, more often than not, now we're talking 70, 80% of the times, so it's never 100%, but 70, 80% of the times you get a breakout of the convergent triangle, and at some point that breakout is likely to fail. It may not fail immediately as this happens, it may take a few candles to get there, but it's likely to fail and come back to the apex of the convergent triangle, and then might give you a setup. And from that setup, you might get acceleration up or down. So if that's taking place and you have looked, remember the context, I started off by looking at the daily chart. I've looked at those last three candles from the previous day, and I've got a bit of a bias that I'm holding on to softly in terms of what might happen on the day. Then I've got this level from the US session. The previous session is always absolutely important. So I've got a higher low that's formed convergent triangle, higher low double bottom. So with all of that, I'm thinking there's a possibility that the bulls might break out. So as that turns, you can look to take a trade if you are quick. If you're not quick, you gotta take the breakout above the convergent triangle. If not, you gotta wait for that candle to close. Now, we have high low double bottom. MTRA is a major trend reversal alert because of the high low from the US session. It's an alert that the whole trend might reverse. There's a big bear trend from the close of the US session, might reverse on us. That's why the A is a major trend reversal, an alert. And if it sets up for it, then you're going to jump in and take the trade. So we have a convergent triangle open, which we have pointed out. And there's three ways you can trade any convergent triangle. It's a BOM breakout mode. You buy as the failed breakout is forming and coming back in the first candle range. So you're watching this. Oh my goodness, the bears are pretty strong. As it starts to fail and come back into the range of the first candle, if you want to take this first one, remember, reversal trading, high risk, and I get stopped out more often than not. But if you are successful, it might go a long way for you. So if you're trading as a reversal trader, you have to take the trades as they come. You can't kind of say, oh my goodness, today I'm not a reversal trader, I'm a trend trader. If you're a reversal trader, take those early trades, and then you can still take trend trades as they come along. So that's a trade you got to take. You know, you got your initial risk 0.25%, 0.5, whatever you're comfortable with, got your stop way down there. If you get stopped out, it is just 0.25. You can still trade comfortably. If you don't want to take that, you buy above the high of the convergent triangle if it continues to accelerate, because you don't know, it might just keep going up. There's many charts I could show you where it just accelerates up. And if you kind of hesitate, then you have to take the third option, which is buy above the high as it gets triggered, and your stop is way down there. So that's how you trade the convergent triangle. And three options, three convergent triangle trades. You don't take all three. You just take one and hold on to the one and see how that goes. So something else, remember, well, let me not say remember. There's another pattern that we look at that needs to set up within the first 9 candles. It's a reversal strategy. We're looking for, firstly, failed breakout beneath the low of the, so we're done with the convergent triangle, but something else is setting up for us, you know, within the first 9 candles. Failed breakout beneath the low of the first candle, that's breakout mode number 1. But then we also want to see another failed breakout above the high of the first candle. And if we see that, it doesn't matter which comes first. So it could be failed breakout above the high first and failed breakout beneath the low. Then when you see it set up, there is a trade that you can take if you're shorting. It's a legitimate trade. I didn't take it because I was already committed to the longs legitimately. I could have closed all the trades and waited. But that's a legitimate trade you could have taken, would have been triggered in. And when you see the bull candle, you may want to close or wait a little bit, but that's, you know, once it fails, you come out. You got to be quick. But that would have been a legitimate trade. I didn't take that because I was already committed to those trades. Then another interesting thing develops for us. We started off with the convergent triangle, and the market is repeating the convergent triangle patterns for us. We have a convergent triangle forming here. Now, this is where all the excitement would have been for you. As the convergent triangle is forming, you kind of said, oh, fantastic. I see a convergent triangle. Now, let me wait for the next candle. Truly enough, it formed within there. And then, boom, before you could even grab a cup of coffee or have a sip and say, I'm waiting for this convergent triangle that George keeps talking about, you start to get acceleration above it. And if you were watching this, it was kind of slow enough for you to decide, hang on, something is taking place here. I need to make a decision. Okay, if you had not been aware of what could possibly happen, you would have missed this trade because you'd have gone above it and you kind of thinking, do I stay? What do I do, etc. Had you not, had you taken this trade and not exited on that trade, your stop would have been here. You would have been stopped out perfectly fine. But as it formed and got to there, there is a trade you had the choice to take. Only problem with that is your stop legitimately should be down here, but you can risk size it and put it at 50% pullback. So if you didn't take that, you should have taken that because you wouldn't have seen all of this stuff. You could have carried on accelerating. Again, you're trading at a small risk. Okay, if you didn't take that because it's too far, whatever the case may be, then you're waiting for a breakout pullback. But guess what we get? The market gets to the measured move right up here. I've got my notes. I think you're going to be looking at this later on. Okay, so as it's forming, you buy above the convergent triangle. Same trade as this trade we're taking here. Buy above that or buy above the high as it turns up, and you just put your stop down here. That's the way to trade convergent triangle. If you get stopped out, just get back in. It's 0.25%. It's not going to kill you. Get back into the market as quickly as you can. Something interesting happens with this breakout. We get to this perfect measured move we get to the perfect measured move. Where are my notes? There you go. We get to the measured move of this trading range here. This is a US session trading range, that high, and the low of that candle market gets to that measure move, try to break up above it. That measured move level at the 200 is also a 50% extension of the range of yesterday, which is one of the things that we always mark ahead of time. So we get to that perfect test. Had you not taken this trade also happens to be an always in trade. So my purple box is always in. So if you've seen that and you're trying to think about it, just buy at the market, small risk, put your stop in and wait and see what happens. But when we get here and we don't get acceleration above it, do not buy any further, because we are now at levels of resistance and the market is likely to turn. In any case, the market does give us a quick reversal. I'm going to be stopping the show, but I'm going to quickly show you because I think it's important. You can just refresh it very quickly. So we got to this level of resistance, and bear in mind where we started, looking at the daily charts. Now we have a crystal clear major trend reversal. I say crystal clear if you know what to look for. Micro wedge top in the tails 1, 2, 3. Remember, always see the pattern, guys. See the pattern. When you see the pattern, then wait for the setup. So we got the low 2 that would have been perfect. So you could have missed all of this. That would say, oh my goodness, what's happening? But when you see that, that's a trade you've got to take. And if you don't take that trade for whatever reason, or if you're taking that trade, then you gotta, I skipped something. There's another trade we have taken. I should have marked it in, always in short. Problem is you're going into the close of the session, but when the market opens, you have a perfect enough breakout pullback, low 2, low 1, low 2. It's a higher high, low 2. Absolutely crisp. It's not an outside candle. You've got to take that trade. If you don't take that trade, then you got to jump in with any of the always in trade. So a lot took place, but man, what a beautiful setup. So you could have missed the bull breakout, but the bear breakout, you should have jumped in at some point and just banked a small amount. All right, guys, we are spot 2 minutes above, but thank you very much. We will see you live trading profits next week, 15 minutes, or we'll see you Wednesdays at the market next week, 3rd and 4th and 5th Wednesdays of this long month. Enjoy the trading. Take care. Marlon, thank you very much, boss. We shall see you again. Bye-bye. Sorry, guys, couple of questions. Any questions? All right, brilliant. No questions. Cheers. Bye-bye.